No discussion on the maths and the concepts of housing finance can be complete unless we talk about an event that shook the financial, social, and employment markets in the world. The pandemic, the coronavirus, the lockdown, by whatever name you call, actually shook the entire world, literally and figuratively, and the financial sector was no behind it. People lost jobs, people lost their cash flows, people had uncertainty about their future lives financially. There were social upheavals, and therefore they needed some serious looking into as to how to address it, both from a lender's perspective, but more importantly from a borrower's perspective. Most people were going to find it difficult to pay their EMIs or their monthly installments. A lot of people who even could pay would be thinking, should I pay or should I conserve for a bad time that might come along? Sometime in the March and April of 2020, nobody knew how this pandemic was going to pan out. And therefore, the central bank, the Reserve Bank of India, announced on the 27th of March 2020 a moratorium on loans. Now, first let's understand the definition of the word moratorium from a dictionary. From a dictionary, the word moratorium means a legal delay or a legal deferment of making a payment. That moratorium was given for 3 months in the hope that at the end of 3 months things will have eased out or we will know how things are developing. Because it was given on the 27th of March, with effect from March, April, May, the 3 months that was the first moratorium, there was a lot of confusion in the market as to what and how to apply this moratorium. The first confusion was that should we automatically give it to all borrowers, or should we ask borrowers to opt to take the moratorium or not? And true to confusion, some banks offered what is called an opt-in and some banks said opt-out. The opt-out was that everybody got it unless you chose not to want the moratorium. The opt-in was nobody got it unless you chose to come in and ask for a moratorium. So there was confusion in the mind of the common man who already was confused and stressed because of the pandemic and the corona that had hit the entire country and the entire world. Banks did different things, all did the right thing but did it differently. As May came to an end, May of 2020, the central bank realized that the pandemic is not going away very quickly anywhere. So in their wisdom, they announced an additional moratorium or the second moratorium of another 3 months, when it went from June, July and August of 2020. Again, the complication or the twist was that people who didn't take the first moratorium were allowed to take the second. People who took the first were allowed not to take the second, or an individual could choose to extend the 3-month moratorium into the 6-month moratorium. As this was happening, there was another curious development that was taking place, which was that banks were beginning to charge interest on the delayed payment. Because after all, a moratorium is not a waiver, it's a deferment of payment. And it's very important to understand that difference. A waiver means that you don't need to pay. A moratorium means you need to pay, except that now you can do it a few months later, a few weeks later. So banks, rightly or wrongly, according to them, started charging interest on the delayed payment. And if you thought that was bad enough, they also started charging interest on the interest that they were charging you, which came up with some horrible calculations. Calculations that would show that your moratorium of 6 months would ultimately result in your term of loan extending by 12 months, 24 months. Now, if all this was not bad enough in the context of the individual like you and me who was wondering about his future, how is he going to pay his school fees, how is he going to pay rent for his office, for his house, whatever, people started going to the courts. There was a famous case filed in the High Court and the Supreme Court where the banks were being asked not to charge any interest at all, leave alone the interest on the interest. When you charge interest on interest, the figures outstanding start galloping and exponentially increasing. Now, the courts, in their wisdom, considered and took time and finally even appointed a committee called the KV Kamath Committee. They asked the Reserve Bank to talk to the central government and finance ministry, and finally it was decided after much time and effort that there will be interest allowed, but no interest on interest. Now, once that was done, of course the banks were not happy with that, but at least it was better than not charging any interest at all. In fact, the government came up with a different scheme altogether. Whether I took the first interest moratorium or not, whether I took the second one or not, if I was not defaulting on the 29th of February, which is the day before the moratorium month first began, then whatever was my outstanding, provided the total borrowings were below 2 crores in the entire financial sector, I would get credit into my account on the interest on interest. Now, it was seen to be a socio-political decision, but for example, personally, never took the moratorium, but still I got a princely sum of 97 rupees into my account at some point of time, being the credit of the interest on interest for that 6-month period for whatever was my credit card loan outstanding as on the 29th of February. Banks were also allowed to do a one-time reconstruction, because if a default was beyond 90 days, if the delinquency was beyond 90 days, you have to classify this as an NPA, a non-performing asset. You have to provide larger amounts of money in your provisioning and your risk weightage, which of course would hit the balance sheet of the banks in a very serious and negative manner. So the banks were given till 31st of December 2020 to look at reconstructing some of the loans and deeming them not to be an NPA once they were so reconstructed. Having said that, again there were caveats, there were conditions. Only certain sectors of loans were allowed to be reconstructed. Only certain categories of borrowers were allowed to be reconstructed. And that in fact led to more angst and confusion. But all that has happened now and things are getting back to normal. People are paying, but there are certain sectors that have definitely been affected. If you look at the small loans that housing finance companies have made, there's a big challenge on recoveries, because people have just been wiped out from a salary or an income perspective. So the dust on this is not yet settled, but as I record this, obviously when you see it, it will depend on how much progress has been made in sorting this out.